I'm going to be showing you guys how exactly to use Fibonacci retracement. So now guys, this is the tool I'm talking about. See this tool? This tool, if you understand how exactly to use this tool, you're going to make tons of money from forex. It's not a joke, it works. If you can understand it, my friends, you are going to, your confidence level in trading is going to increase. So let's get straight into the business. Now, how do we use this tool? I'm going to be telling you guys, 3 major rules that you need to consider in using this tool. So number 1, we use this tool in a trending market. What do I mean by a trending market? I've made videos on how to identify a trading market. I'm going to also highlight it in this video. So how to identify a trading market is a market that has been making series of higher highs and higher lows for a bullish trend, and lower highs and lower lows for a bearish trend. So this is example of a bearish trend. This is example of a bearish trend. You see, you can easily identify it using your trend line, or you can still map out your lower highs and lower lows using your market structure knowledge. You just have to map out the different lower highs. These are the lower highs of this trend. Okay, these are the lower highs. So once you see market trending this way, know that the market is in a bearish trend. Then on the other hand, the bullish trend has higher highs. You see, higher highs and higher highs. You see, higher highs is making higher highs everywhere. You see, each high is bigger than the other high. Okay, so and so on and so forth. And see the lower, you can see the lower lows, the higher lows are also trending in the same direction. So this tells you that this market now is a bullish trend. So now whenever you spot this kind of trend, that's number 1, you spot the trend. Then secondly, you want to wait for the retracement. The retracement is very important. Where do you anticipate retracement? Where do you anticipate a reversal from? So these are the important things. So first, when you identify the trend, you now find out when the structure has maintained a bullish trend. Now you can see at this point the trend has been confirmed changed. The trend has changed at this point. It has changed. You see, it has changed at this point. Because why? This was the previous high for the lower for the bearish trend. This was the previous high. So the moment this high was taken out, that was when we confirmed a bullish trend. Okay, now we use our Fibonacci retracement tool. How we use it is that we bring this tool, okay, at the previous low. Okay, let's start from here. This was the low. Okay, now we put, for a bullish trend, we put 100 on the low, on the support area, and put 0 on the resistance area. The resistance area can be considered as high, the support area can be considered as low. So this is, let me zoom it. You see this, we put the 100 at the support area and put the 0 at the resistance area. So make sure the high of the make sure the high of the previous one was taken out before you do this. So once you confirm this, now you now look at your 61.8 zone, between 50.0 and 61.8. This is called the golden ratio zone. You see this area is the golden ratio. So, and another way to confirm the last tip, or the last secret you can use to note where the market will reverse from, is that there will be a demand zone for a bullish trend. There will be a demand zone. This is a demand zone. Okay, so market will come back to that demand zone, and it tallied with the trend. You can see the trend. The trend tallied with the trend. You see the trend. So the trend tallied with 61.8 and 50.0 zone. So once the market gets to that point, your prerogative or your objective at that point is to place a buy. Place a buy at that point. Once you see that market has gotten there, just place your buy. Okay, put your stop loss at 70.0 or below it, and you can see the stop loss tallied also with below the demand zone. Okay, so we'll put our take profits at the previous high. This is the previous high, so put that there. You see, at this point, that's our take profit. The next resistance zone, that's where you put your take profit. So now 1:3 reach to reward ratio. You see, so this thing works. Now I'm going to show you another thing. That's what we call swap zones. Okay, so swap zones are where support changes to resistance, and resistance changes to support. Now, where did I see this swap zone? This is the swap zone. Like I showed you guys, this is where the previous high was taken out. So now see what price did. Price went up there. Let me use just in parts 2. So price went from here. See guys, price went from here, broke that high, and when it was returning, it returned to that swap zone. You see, and that was where it took off. So this zone here was supposed to be a resistance zone, but it failed. So now, because this resistance zone has failed, it now turned to what? A swap zone. So in this case, when you have a swap zone, 61.8 retracement level on Fibonacci might not be necessary. So you just have to use your swap zone. Okay, and you see, it even got to that 50.0, between 50.0 and 10.8. So it's still valid. You see confirmation. So at this point, you are good to go. Just do your what? Place your shots, shoot your shots. Maximum, take maximum, and reasonable risk that you can bear. Okay, at this point, you put your stop loss here and target the next zone. The next zone is where this is the next zone. This is where I take our next zone here. You see, we'll take our TP straight to the next zone. You see, we take our TP straight to the next zone. What are we getting? 1:3. This is how easy peasy way of making money from forex using Fibonacci retracement tool. So guys, we confirmed this entry with our swap zone technique and Fibonacci technique, and also trend line. You see, trend line matched. So guys, this is just dope. Okay, the next part now is here. How do we get to this point? Let me highlight it. Now when when price came to this point. Now how do we confirm this entry too? We confirm that the previous high has been what? Taken out. Previous high has been taken out. See, this high has been taken out. Okay, now retracement is going to happen once a supply zone has been taken out or a high has been taken out. There's going to be a retracement, guys. So now we use our Fibonacci. We place it at the low. Okay, place 100 or 1 at the low and place 0 at the high. Now is this one was example 8 God, and again see another confirmation is there is a zone there, a small zone. Look at it. See, a demand zone is there. So this was a very clean trade. This was a very clean trade, guys. Very clean trade. You see, very clean trade. But look at what I'm showing you, guys. It got to the trend line. It tallied with its 1.8, and it also tallied with a zone. So 3 confirmations. So guys, you don't need a prophet to tell you to take this trade from there. Okay, take this trade, put your stop loss at 70.0. if it gets to 70.0, you know you have been invalidated. If it crosses that 70.0 or 78.6, yes, you know they have been validated. I mean on these Fibonacci levels. So you put your TP, look for where the previous high is. Previous high is here, you know, it's here. Okay, and 1:5, that is what you're targeting. Boom, you make your money. Okay, so this is easy peasy. It might sound so easy here, but market can still go the other way around. But you just have this confidence that you know what is going to possibly happen. You see, 7 out of 10 times is going to work. You see how many entry have we tried? We have tried about 3 entries. We entered from here. We entered from this other place here. You see, 3 entries, and all of them are on point. So at least 7 out of 10 times is going to work. Okay, so now we move on to the next one we have. So let's see if we can see another opportunity. Now see this opportunity. See, market moved from here, broke this very high, broke this high. Okay, now it broke it and retraced to this point. Retrace to this point. No, let me retrace to this point. See this point? I'll tell you why it just got there and stopped. Instead of coming back to this point, it not touched the trend line, it just retraced that point and moved up. So now that the market has moved up, how do we find entry? So listen, if you don't see entry, you don't have to take trades. If your setup doesn't show up, don't take trades. Okay, so in this case I would advise you to stay out of the market, because the market seems to be consolidating at this point. See, it seems to be consolidating. The market consolidated here. You see, consolidated here. See, this is just consolidation, ranging. Market is ranging, so no clear paths, and it now broke out. When it broke out, it came here, and just hold on for your setup to ride and you take your trade. So guys, this is just basically on how to use Fibonacci retracement in forex. So I hope this video helped someone today to get clarity, and if you like this video, please click the like button, follow this channel for more inspiring videos and more helpful videos like this, and it will also help this channel to grow and reach more audience. Okay, just share the video to your friends, and to help your friends that are struggling also to make money from forex. So thank you guys, and God bless you.